One of the drivers of market action all week, of course, is Fed speak. San Francisco Fed President Mary Daly speaking out last night, suggesting that the neutral rate for interest rates could be higher than pre-pandemic levels.
5% is not going to be the new neutral. There's no evidence that that will be the new neutral. That's still the policy rate trying to fight back in high inflation. But you absolutely could see the nominal neutral rate was 2% inflation plus 0.5 real rate, 2.5. I completely could imagine that we go from 2.5, anywhere between 2.5 and 3 as the nominal neutral in the go forward.
She went on to reiterate her position that the recent surge in bond yields could have the same effect as a rate hike. And our next guest moderated that interview and marked the Fed's latest move to go social. Joining us now is video creator and writer Kyla Scanlon. So Kyla, you spoke to Mary Daly there. What was your big takeaway?
It was a really great conversation. We talked about the housing crisis, we talked about the labor market, we talked about her views on monetary policy, and the whole goal was just to get a better grasp of what the Federal Reserve is thinking about and the trade-offs that they weigh every single day. So I thought it was a really great conversation with a lot of good takeaways. Yeah.
Hey, Kyla, it's Julie here. It's good to see you. It's
Hey.
so interesting to me, the sort of Federal Reserve on the one hand, and then the public perception of the Federal Reserve, both from within the financial community and among sort of lay people. And one of the criticisms that the Fed gets is, well, they're not counting energy prices in their inflation calculation. They're not counting food prices. I'm just curious if part of the conversation, what was your impression of Daly's acknowledgement of what normal Americans sort of are concerned about?
Yeah, so I kind of asked that question, how do you balance talking to markets and then explaining what people actually need to hear? And for them, the whole goal is to get inflation back down to 2%. So I think for the Federal Reserve, they have a dual mandate, managing inflation and then managing the labor market, full employment and price stability. And so I think that a lot of times when people talk about the Federal Reserve doing certain things, they're actually pointing to fiscal policy instead of monetary policy. So I think that's the thing that's really tough to remember. The Fed doesn't have all the tools that are needed to fix all the problems that we do have.
And Kyla, I'm interested in, I was just talking to Julie about this, our central bankers, they talk a lot. And listen, I'm a reporter and I'm not complaining about that. I'm sure you're not either. I love it, keep them talking. But they even, of course, listen, the Fed even launched accounts recently on Instagram and Threads. What do you think the point of that move was, Kyla, Scott?
Yeah, I think it's super important. Not everybody's on Instagram, but a lot of people are on Instagram, the people that, they're serving the public. So for them, I think it's just a way for them to tap into a larger audience. Not everybody tunes in to an FOMC meeting and treats it like the Super Bowl, right? So I think it's just a way for them to get their message across to younger people and to make sure that everybody understands why monetary policy decisions are happening and the impact that they could have on day-to-day lives.
So we have, to Josh's point, we've been hearing from a lot of Fed speakers lately, and it seems like they are now leaning towards a pause or a skip or an ending to interest rate increases. Was that your impression from Daly and from the other Fed speak we've been hearing lately, for that matter, too?
Yeah, I think all of them have been like, yeah, we're probably going to pause here soon. Talking about long-term yields, talking about term premium, as Logan did. And then I think another president came out today and basically said the same thing, that we're going to pause. There's been a lot of them on the docket this week speaking, and I think everybody's hinted at that idea. And it makes sense. We're still trying to figure out how the economy is going to respond to all the rate hikes that they've done. They moved pretty quickly, all things considered. So for them, I think it's just like we have to figure out what's going on with the economy to see if the economy does need another rate hike.
Kyla, one of the things I like about talking to you is you tend to have a good measure of the zeitgeist, right? We've talked to you about the Vibe session before. We talked about the Taylor Swift economy. Kind of what's on your radar right now? I know that's kind of a big general question, but what's piquing your interest right now? What do you think is in the zeitgeist right now?
Yeah, I think that there's a lot, Taylor Swift is still a big part of the zeitgeist. I'm really interested in this idea of life on beginner mode and how that's not there anymore. So the Mitsubishi, which I think I say the name wrong, but the Mitsubishi Mirage was one of the only cars that was still selling for under $20,000, and they've discontinued it. Now there's like no cars that are in that price range. Also, the fall of the starter home is elements of job stagnation, of wage stagnation for workers. And so I'm just really interested in this idea of where does the stair step begin for people who are just graduating, just getting into the labor force, and for those that are trying to progress in their careers, and do we have this quote unquote beginner mode that used to probably exist for previous generations? So that's something I'm noodling around on, but don't quite have a thesis around it yet.
It's a good question.
It's a good one. Kyla Scanlon,
Thanks.
thank you for joining us today.
Thanks for having me.